Hi guys, welcome back to accounts class. Today we are going to discuss AS 23, which is consolidation of an associate. Okay, consolidation of an associate. Anybody watching this class without watching consolidation of subsidiary, please go and watch that class recording whatever and then come to this, or at least you should know the basics of consolidation as to terms of what is goodwill, capital reserve, minority. Then only this topic is easy and you can easily get through this topic. Following guys, okay. This topic is very simple. We will start and finish in this class itself. Scoring area and easy to understand, easy to solve also. Especially in inter, we have only limited topics in our syllabus, so we can easily get through. The discussion will revolve. First, I am giving you structure. First, we should understand what is an associate. Basically same definition as per Companies Act, but Companies Act is in law, so I will again revise the definition of what is an associate company. Companies Act read along with AS 18 related party transaction or related party disclosure. Over there we have a definition, we will use that. Then I should teach you types of associates, once you know associate, and then only I can go to accounting for an associate. Are you all with me guys? So accounting is the last part. In our study material we have 4 illustrations apart from MCQs, correct? I think 4 illustrations or 5 or 6, whatever guys, we will do all of them today. This is the chapter overview, okay. So first let's understand what is an associate. If a company H has, let's say, 60% share capital in S, it becomes a holding company, and relationship is a holding and subsidiary relationship. Yes guys. Now what is the definition of an associate we saw in Companies Act? If you can remember, associate company is a company in which you have significant influence. What is significant influence? They say significant influence is the ability to participate, not control guys. The minute control comes, it becomes a holding and subsidiary relationship. I will tell you why companies go for associate also, but let me first finish the definition. Ability to participate in the financial and operating decisions of an entity. So what is significant influence? Ability to participate in the financial and operating policy decisions of a company. So to know if one entity is an associate of another, I have to check, let's say if X is investing in Y, the relationship is associate. I have to check if there is a significant influence. How do I check what is significant influence? Check if there is an ability to participate in the financial and operating decisions. Sir, I want to put this in numbers, sir. This is theoretical. So what do you mean by ability to participate in financial decisions? What is the number? I want number to understand. The standard says in simple, check if you have 20% or more of the equity, or in other words 20% or more of the control in the other company. Are you following guys? Then it is deemed that you have significant influence. Are you following guys? Understanding? But sometimes even if I have 22%, what I say nobody will listen. I have no control. That is also possible. How is that possible? Even if I have 22%, the remaining has 78. So they can pass a resolution. What I do or don't do doesn't matter. Correct? I am like a minority. Correct? So the default setting, default rule is if you have 20% of equity control in a company, you become an associate. Second one is, sir, I have less than 20%. That means, so if I have 20% or more, I will treat it as an associate. Here, not an associate. However, both these has exceptions. Let me give an example. Let's take CSK. CSK is held by Chennai Cements. Chennai Cements is the entity which controls and owns CSK brand. Now in that, is Dhoni having 20% or more of the equity? No. Dhoni may not have 20%. We don't know the numbers. Let's say he is not having. But even though Dhoni is not having 20% of the company, even though let's say he has zero, let's say Dhoni has zero in India Cements, but still he will participate in the financial and operating decisions of CSK, correct? Sir, what do you mean by financial decisions? Which player to buy? Dhoni will tell, don't go beyond this budget. Something he will tell, plan the budget of CSK like this, plan the operations like this. So he is able to participate in the operating and financial decisions, he is able to influence the decision, correct? Are you following, guys? So the standard says, basically AS 18 read along with associate company definition, read along with AS 23 says, default setting, if everybody is silent, if I have 20% or more, it becomes an associate. If I have less than 20%, not an associate, but the otherwise also is possible. The words they use in the standard is called, they don't use the word exception, they use the word unless demonstrated otherwise. Meaning, even if I have more than 20%, let's say I have 23%, I may not be an associate if I don't have ability to participate in operating in financial decisions. I am a dummy person, don't write dummy in exam. Unless demonstrated otherwise. Are you following? The opposite also. Sir, I have less than 20%, like Dhoni, only 1% I have. Example. As per numbers, you are not an associate, but I have the ability to participate in all of this, then I become an associate. So this is the provision for learning for exam, guys. For learning for exam, what I want to look at this. What is an associate company? In a company in which I have significant influence. For exam, what I should know? Significant influence. This I am sure you would have already studied. Ability to participate in financial and operating decisions. How do I determine this? More than 20% equity? Yes. Less than 20%? No. But opposite also is possible if you can demonstrate with evidence. Are you following, guys? So now you are done with the definition of an associate. But I need to focus on the logic also. Okay. Now, so for example, an entity H can have S and can have associate 1. If we call it as a group, correct? Holding company, one subsidiary, one associate. I will do consolidation for both. When I do consolidation, it's holding with subsidiary, with associate. Sir, I have 10 subsidiaries, 3 associates. You will do consolidation for all the 13 together. Are you following, guys? But we don't have sums like that. We don't even have sums of subsidiary and associate together. Are you following? Now, let's take a case where I have holding and I have associate only. No subsidiary. I have 3 associates, but no subsidiary. Is consolidation mandatory? No. Consolidation is mandatory only if you have subsidiary. Are you following, guys? I am saying consolidated financial statements. If I have only associate, I will still value the investments in based on accounting, which I am going to teach you later, but I will not prepare consolidated financial statements. Are you following, guys? Are you understanding? Consolidation only with associate. We have some exceptions for that, but default I will do consolidation only if I have subsidiary along with an associate. 2 different entities, guys. Are you getting this, guys? This is subject, what I should learn. They don't test this part and all. In all questions that they give in exam, it is assumed that when I am doing for associate consolidation, they have some other subsidiary for whom consolidation took place. Are you following, guys? Now, before I go to the next step of types of associates, sir, why do we have associate? Why should I have 20%? Why not 50%? I'll give an example to understand reason of associate. Let's take Hyundai car company, which is there in outskirts of Chennai. That is the manufacturing plant where the cars are manufactured, correct? What Hyundai does, they assemble the car. They don't manufacture glass, door, tire. They buy tires, they buy the door, they buy the glass, they buy the seat, everything they will buy. They will only do assembly. Then what they will do, sir? Engine is done by Hyundai. Engine is done by the car company. Within engine also some parts will be purchased for assembly, correct? Now my question, whether you buy Hyundai car in Chennai or Mumbai or Delhi or Kolkata or let's say Assam, car will be same. Can I say car in Chennai is better quality than car in Delhi? No. Product is standardized. Wherever I buy the Hyundai car, steering wheel is going to be same, default. What gearbox will be the same, correct? That's the standardized of any brand. So now, Hyundai is buying all this. In reality, Hyundai is there in Chennai in a location called Sri Perumbudur, outskirts of Chennai. Okay, it's a separate district. Now, from where will I buy tires, door, glass, seat, nut, bolt? Will I buy from Mumbai or will I buy from nearby Chennai itself? Nearby Chennai. Majority from nearby Chennai, rest will be from other places, because again cost of travel should not increase. That's why they say Chennai, Tamil Nadu is an auto hub of India. How Bangalore is IT hub. Auto hub of India is Chennai. We have Hyundai manufacturing and other many other companies. We have even Ashok Leyland is there in Chennai. Okay. Now, so what happens in reality? All these entities are, let's say X Limited is giving tire, or let's say MRF is giving tire. So leave that. Door is given by X Limited. Y Limited is giving glass. Seat is given by Z Limited. These are all small MSME entities. Okay, or some other entities, medium entities. Their only work is to manufacture and supply to Hyundai. So for them, 90% of their sales will be to Hyundai, maybe 5-10% outsiders. So I am fully dependent on Hyundai, correct? But I am happy because I don't have to worry about marketing. Whatever I manufacture, they will buy. I will basically manufacture what they need, in other words, correct? Now, if you are Hyundai's management, part of Hyundai's management, okay, tell me, will you focus on these companies and daily see what they are manufacturing, or just leave it, let them manufacture what they are doing? Three options. One, I'll give you three options. Completely ignore what they are doing, whom they are hiring, whom they are firing, what raw materials they are using, because what raw materials they are using for seat will affect my final car. So completely ignore, trust them blindly and buy from them. Option 1. Option 2, full control from morning to night, whatever they are doing, I want to know. Third option, not full control, but let me just oversee weekly once, let me just oversee what they are doing. Which one you will prefer? Definitely not ignore. Anybody sensible will not do this. Full control means, then why should I outsource? I can rather do it by myself, no. If it's full control, I can have the same setup in my factory. I can have a team. Because I don't have the time to fully control and do it myself, only I am outsourcing. That means when I am outsourcing, I will only oversee. Now, student is there. I can't call him every single day. Hey, you studied, come on, wake up. Come on, why are you sleeping at 3 p.m.? I can't do it every day for everybody. What I can do is, if somebody has challenge, they can reach out, or I will check once in 10 days, once in 15 days, how is it going on. That's it. So we will only oversee. Hyundai will oversee. Why should I oversee? So that things are going fine. That means control means I need to have more than 50, but I need to invest a lot. I need to do consolidation. Instead, just to oversee means I don't want to control. I just want to participate in what you are doing. You are hiring a new HR manager. Go ahead and hire. I just want to participate in the decision. So I will make you an associate. So some fear will be there. Are you following, guys? Understanding why sometimes entities prefer an associate over a subsidiary. Subsidiary means you are me. We both are same. I have the majority control. Associate means only 20, 25, 30. Are you getting logic, guys? When I go to associate. So now we are done with the first part of the chapter, or what is an associate. For exam viewpoint, forget the Hyundai example. Remember these limits. Mainly ability to participate more than 20%, less than 20% means no, but opposite also is possible. The word is unless demonstrated otherwise. Are you following, guys? Clear? Hello? Now types of associates. The standard classifies associates into two. Now, Hyundai, that seat example, car seat. Hyundai is investing in the car seat company for a long term or short term investment? Long term. Period is, intention is to have a travel together for a long period. So, those kind of relationship with associate is called a permanent associate. Then other is called temporary associate. But the standard defines opposite. Standard defines only temporary associate and it tells permanent is nothing but others. Are you following, guys? So what is a temporary associate? I am going step by step. Temporary associate means, see, I didn't purchase for any business relationship. I purchased so that someday I can sell you. For example, Paytm share now is falling. Now if we check, it will be very low. It's been falling drastically. Whether it will increase or not, I don't know. Like Yes Bank, it can go to 5 rupees. Yes Bank crashed, went to 5 rupees per share. Now it's somewhere around 20, I think. 2016 something, it's there. So if you think it's a gamble, you will go buy Yes Bank for 5. Like that, now Paytm is crashing. I don't know where it will stop. It can become 0, it can become 5. But again, at some point, it will rise. I have a lot of money, so I want to take a gamble. So I will buy 30% of Paytm shares. Thousands of crores I will buy. Gone means everything can become 0. But I am going for a gamble. I will buy 30% because everybody is selling. I have a lot of money. I will buy. My intention is to sell this again if it jumps. Are you following, guys? So one intention, I purchased 25%, not for an association with you, not for an associate relationship, to sell this investment. You are a short-term investment for me. Are you following, guys? Short-term investment. I am giving you keyword, but in simple, the word is investments which are held for sale. Short-term intention. See, whether I sell or not, I don't care, guys. But when I am buying, my mindset is to sell and make money. Are you following? This is called a temporary associate. Second is called associates where there are long-term restrictions on cash flows. Sir, long-term restrictions on cash flows. What do you mean by this? Why do you invest somewhere? To get return, to get profits, correct? Imagine I invested in an associate in China. Okay, now Chinese government is saying you can only invest in China, you can't take money out. You can only invest, you can't take the money out. Possibility is there, guys. Some countries say you can invest in my country, but you can't take the money out. Foreign exchange regulations. Long-term restrictions on cash flows. Sometimes after investing, some war came. So even though it's my associate, I am not able to take my money back. Are you following, guys? Some countries have it. Remember in AS 11 class, I told you about Forex. I told you why dollar rate goes up, why dollar rate comes up. I told if there is more export from India, dollar will come into India means good for India. More import, if we need dollars, if money is going out, dollar rate will go up. So government will promote Tesla to set up a factory in India because Elon Musk will come with thousands of dollars, lakhs of dollars, crores of dollars and invest. But I don't want him to take the money out because if he starts taking the money out, again dollar will go out. So like that in some countries they have long-term restrictions. Next 5 years, next 10 years you can't take the money. That means even though I have invested, I can't get the profits back. That will also be classified as temporary. So the standard says temporary investments, both of these will not be valued as per AS 23 because it's not an associate which meets my, I don't have influence, nothing is that. The intention is different. Are you following? So we will account as per AS 13, accounting for investment. Treat it like any other investment. Are you following, guys? So what are the types of associate? Temporary and permanent. What is permanent? Other than temporary. So temporary is short term or long term restrictions on cash flow. Account as per AS 13. Then only permanent I will account as per AS 23. Are you following, guys? That is what we have seen here. Types of associate also is done. So for exam viewpoint, what should I remember, sir? Very simple. What should I remember for exam viewpoint? First one. First thing that I am going to remember. Associate is an entity in which I have significant influence. Significant influence is the ability to participate in operating and financial decisions. How do I decide that? You have 20% or more of the equity, becomes an associate. Less than 20%, no associate. But the opposite is possible. Even if I have more than 20, not an associate. Less than 20 can still be an associate. Consolidation will be done not for associate separately. I should have along with a subsidiary. Are you following, guys? Types of associate, temporary and permanent. Temporary is short term or long term restrictions on cash flow. Temporary, you use AS 13. Permanent only AS 23. Are you following, guys? So far let me just run through the book. In book itself they wrote new inclusion and new syllabus, or I don't know if I wrote, I don't remember, guys. Edited long back. Fine. I'll just highlight the keywords for somebody using study mat, because new topic means you will like to use the study mat. This is nothing but study mat underlined and reformatted. That's it. That same thing, 20% or more of the voting power is there. I'm only focusing on keywords. Let me just focus on the key things. Okay. Yeah, this one. Yeah, okay. So in these two cases, we follow which one, guys? AS 13. This only is the temporary. I told short term, the term they use in the book is control is intended to be temporary because investment is acquired and held exclusively with a view to dispose in the near future. Basically short term. Intention to sell. Second, cash flow restrictions. The key term is it operates under severe long term restrictions. That's the key word, guys. I want to show you the keywords. That short term is nothing but intention to dispose in the near future. That cash flow restrictions is nothing but operates under severe long term restrictions which significantly impairs its ability to transfer funds to the investor. That's why in simple I told long term cash flow restrictions. The right technical word they use in AS 23 is it operates under a severe long term restrictions like foreign exchange movement which significantly impairs the ability to transfer funds to the investor. Just wanted to connect both these points with the terms they use in the standard. Clear, guys? Are you following? Now coming to the main part. Permanent. We leave all this. Permanent associate accounting. This only is the core. The sums we have is for this permanent associate. Are you following, guys? Okay. Steps are very easy. I can finish this chapter in just 20 minutes. Promise, it's very easy. But logic will take another 20-30 minutes. Okay. If you remember consolidation of holding and subsidiary, we did line by line addition of every item and added into our books. Correct? That time why I told you we did line by line addition, basically subsidiary is mine. It's mine, so I need to show by investing in this capital, it's represented by what assets and liabilities. My holding company shareholders need to be aware of that. Correct? In consolidation of subsidiary, we spent half an hour understanding why line by line addition, why not percentage. Correct? Now, in associate, you are the minority. See, holding itself, I can't even use the word holding. I am the minority. That's why I am calling it associate. Holding is investing in the associate. Correct? So, no more use the term holding subsidiary, guys. I am using it for you to easily correlate. So, I have a minority. If I do line by line addition, will it make sense? even if you do line by line addition, I don't control the asset, I don't control the liability. In consolidation of subsidiary, I control the asset, I control subsidiary. So line by line addition makes sense. I can decide when to sell, when to pay liability, correct? Here I don't control anything. So line by line addition will not give a true and, see, even though it's line by line, sir, I will add only 20%, sir. It will not give a true and fair view because I don't control that asset. Are you following, guys? The decision is with some other entity. So here the standard provides for a new method for accounting. That means, let's say, for example, Adidas has invested 25%, let's say, in Reebok. Reebok becomes associate of Adidas. Share capital, let's say, is 100. Reserves and surplus of Adidas, let's say, is 50. Other liabilities 300. Here property, plant, equipment, let's say 250. What's the balance sheet total, guys? 450. Here also 450. Let me say investment in Reebok is 50. 150 is current assets, correct? Hello? Okay. Reebok financial statement, let me just prepare a rough one. Let me say share capital is 200. That's why I have how much, guys? 25%, 50. Here let's say other liabilities 50, total is 250. PP, let's put it as 200. Current asset as 50, 250. Are you following, guys? Here, unlike consolidation, add everything and strike off the investments. No, I don't do that. Here, the logic they are saying is, this is still an investment for you. What is still an investment? This 50 is still an investment in Reebok. Show me what is the value of investment today. Are you following, guys? Here, we don't have a detailed 6-step, 7-step approach of doing computing minority. Nothing is needed. It's very simple. They are saying, don't cancel investment. Because why we cancelled investment in consolidation of subsidiary? Because I did line by line addition. Just now I explained, I will not do line by line addition. That means investments will remain at 50. But I will restate my investment because 50 was the value when I invested in Reebok. How did I find 50? If you look at Reebok's value, look at this. If you look at Reebok's value, what is the net asset of Reebok? Tell me, guys, what is the net asset? Net asset is 200. In this 200, what belongs to me? 25%, which is 50. That 50 only I am showing here, correct? Are you following, guys? But this was the value on the date of investment. Let's say after 2 years, will the net assets of Reebok still be 200? No. Let's say net asset now became 300. So my value is how much? 25%, how much, guys? 75. So I invested 50, I earned 25 profit. Now I will show investments at 75. Are you following, guys? So then balance sheet is not tallying, no, sir. See, if I show here investments at 75, balance sheet is not tallying, correct? What is the gain I got? 25, which is nothing but profits earned after investment. We call it as post acquisition profits, correct? So that 25 will come here. Are you following, guys? But we will not show it in consolidation. It will be a separate disclosure below. So basically, are you able to understand that? I will not touch anything else. I will just restate my investments. Are you following, guys? So here, let me give you the steps and then I'll explain the logic. Did you understand logic till now, guys? See, I didn't give you what we're going to do. I just told you how the accounting is going to work. How accounting will work in simple. We don't touch everything else. I will only restate my investment to truly reflect what is the value today. Correct, guys? So for that, write down. I'll give you steps. Write down. Accounting for investments. Accounting for investment. Accounting for investment in associate. Accounting for investment in associate in bracket. In bracket. Or this method, what I am going to teach you now, they are saying, unlike consolidation where you took all assets and all liabilities and added, here I am focused only on net assets. How to compute net assets? Other way, share capital plus reserves. In other way, if this 200 now became 300, my reserves and surplus increased by 100 for the associate, correct? So they are saying, forget assets and liabilities, focus on shareholders funds of associate. The shareholders funds when I invested was 200, now it became 300, yes, so I am also benefited. What is my benefit? 25% of increase. So they are saying, focus on the shareholders funds. So this method is called equity method of accounting investments. It's called what, guys? Equity method of accounting investment in associate. Only 4 steps, or I think 1 step, 4 things to compute. Okay. First will be, see, follow carefully, guys. For Adidas, in Adidas balance sheet, what am I changing? Only investments, nothing else. Nothing else will be disturbed, guys. That investments will change. So, first I will write what was the investment, correct? What was the investment that I purchased, correct? So, we will write cost of investment in associate XXX. In our example, it was 50, correct? Hello? This is what I paid. What I paid. Less. What will come less in subsidiary, guys? From investment, sometimes you reduce what? From the cost of investment. Pre-acquisition dividend. Do you remember that logic? So imagine in this case of Adidas and Reebok, imagine when I purchased this company, share capital was not 200. Assume the share capital was 150. Reserves and surpluses 50. So collectively 200. Now from this 50 pre-acquisition reserves, if they pay dividend, I have to reduce some cost of investment. Why? I invested by paying 200, but out of my investment, I am receiving some money back in form of dividend. So less what, guys? Pre-acquisition dividend. Is this a new adjustment or already you know? Already you know. So you will find something called net investments. Are you following, guys? Clear? This is my first step. Are you following? Hello? The second step is basically, come back over here, come back to Reebok Adidas. I hope it's not that shabby. Numbers are visible, guys. Are you able to understand the numbers, or do you want me to rewrite it? Able to follow? In this example, what is the goodwill or capital reserve on acquisition? Step 5 of consolidation. What you paid versus what you got. In other words, if somebody watching this for the first time also will understand, I paid 50, but what I got is also 50, correct? See, what I got is net assets of 200, 200 into 50, sorry, 200 into 25%, I got 50, correct? So what is the goodwill in this sum? 0, correct? The same question, what if my investments is 70? Then goodwill is 20. Same as consolidation of subsidiary, guys. Anybody watching this don't know consolidation of subsidiary, at least watch the first class of consolidation of subsidiary of just 1.5 hours. You will get more clarity. Following guys, it's a continuous topic. Are you all understanding? So goodwill is how much? 20. That means for assets, net assets worth 50, you paid 70. So my investment is worth 70, but that 70 breakup is 50 assets, 20 goodwill. So that time what I will do, if my investment here comes as 70, the standard says don't show 70. Show the breakup to the shareholders that, hey, out of the 70 that I paid 50 only for net assets, 20 is for goodwill. That means I have to compute goodwill. So what is step 2? Compute goodwill or capital reserve. Capital reserve means reduction from the value of investments. Are you following guys? So second step is also same as what you did in consolidation of subsidiary. Are you following guys? Lakshita, understanding? How to find goodwill? Same. What you paid versus what you got. That's step 5 in consolidation of subsidiary. Copy, paste, no change. Are you following guys? Net assets on the date of acquisition. In our example, I paid 70 for something worth 50. So my goodwill is 20. Cost of investment is 50. So my total investments is 70. Are you following guys? Show the breakup. These are the first 2 things I have to do. Third thing. So up to now, anything new? Nothing new. The only difference is no line by line addition. That investment will be restated using a method called equity method. You are learning with logic. Are you getting the logic guys? Okay. Next, third and fourth only is my new 2 steps. That's the only thing new we are going to learn in AS 23. Okay. Forget associate for just a minute or 2. Let's take a simple example, then you will understand this very well. Okay. Let's say with your first month's salary, in your first month's salary of 1 lakh, you took the entire money and deposited in bank FD. You decided first month everybody will spend, I want to save the first month, so you put a bank FD with an interest of 10%. Interest of 10% annually. So which FD will give 10%? Example, let's say FD in company, deposit in company. So my interest added is how much guys? 10,000. Are you going to take this money and start using it? No. What happens to bank FD? If you don't leave it, it will automatically get renewed every year. Suddenly if you see after 5 years, value will be 1,70,000, 1,80,000, correct? So after 1 year, what is the value of FD in balance sheet? 1,10,000. So in my balance sheet, my FD will be 1,10,000. Are you following guys? Okay. The bank will pay this interest to me, or they will only do accrual entry of accrual plus they will pay. It comes into my account. Balance will increase. Correct. If you want, you can withdraw. If you withdraw interest, you are like, hey, super, 1 lakh became 1,10,000. Every year interest kept adding. Suddenly one day it became 1,70,000. If I want, I can withdraw. So I withdrew this year 20,000 rupees of interest I withdrew. What will be the balance FD in bank account? 1,50,000. Correct? So look at the logic guys, or look at the analogy I am giving you. I invested 1 lakh in bank FD. I got interest of 10,000 1 year. Add every year. Let's say after a few years it became 1,70,000. So value of investment when I made was 1 lakh. Today it is 1,70,000. If I withdraw the money, take the money out, it becomes 1,50,000. Same way come here. When I invested 70. But will it be 70 always? It will keep increasing. What is that increase? What is the increase? How it will increase? Interest is for FD. Here what is my interest? No, dividend is the withdrawal. What is my interest? My share of profits of the associate. Let's say after investing in Reebok, Reebok earned net profit of 300. Yes, 300 is mine. Can I say 300 is mine? No. What is mine? 25% of 300. So I will add for this, add 25% of 300. How much is that? 75. So now my value of investment became 145. I am happy. I invested 70. Within a year it became 145. I am happy. What I will do when I am happy? I wanted to withdraw this money, but it's not in my control. If the associate Reebok is paying dividend, then I will withdraw. So let's say out of 145, 75 current year profits, they declared a dividend of 100. Out of 300, they declared dividend of 100. What is my dividend? 25%. So I will reduce 25. What is net value of investment? 120. Correct? Are you following, guys? So what you have to do, just like the bank FD, hey, when I invested 50, but I paid extra 20 for goodwill. So my cost of investment is, now that 70 became 145 because associate earned profits, like my FD earning interest. Now out of that profits, how much I withdrew? 25 dividend, like withdrawing interest. So my balance investment today is worth 120. Today if I sell the associate, I should get somewhat around 120. It's worth. If somebody else is buying the associate today, they will pay 120. Theoretically, are you following, guys? From me, if they buy the share from me, are you understanding? Is it fast or understanding? How many of you fast? No, you can be honest. Hello. Are you following, guys? Really understanding? We will see and do some. So what is point number 3? Point number 3 will be add post. The word post is very important. Only post acquisition, not pre-acquisition. Add post acquisition profits of the associate. Are you following, guys? Are you getting the logic? Hello, understanding, Lakshita? What will be the next thing? Less dividend. Dividend withdrawn is for interest. I can use interest withdrawn. Here dividend received. Are you following, guys? So my equation will be, look at this. Start with cost of investment less pre-acquisition dividend. Next compute goodwill or capital reserve. Accordingly I will add or less. So your net value will become 70 in our example. Then two things. Add post acquisition profits of associate. Post acquisition share of associate and less dividend. And less dividend. Correct? Then the net answer is what? Investments value as per AS 23 for the purpose of consolidated financial statements. Our answer 120. In consolidation, I will restate my associate into what, guys? 120. Are you following? Right with me. Are you following? This is item number 5. After adding profit, reducing dividend. Are you understanding 120, guys? 120 is the investment value as per AS 23 for the purpose of consolidated financial statements. Clear? Now you use a different color pen, and very important common mistake, this point 3 and 4. Most common mistake students do is they take the full profit and full dividend. Not intentionally, it happens in exam. So somewhere here in the side or margin, write down how much of profit should I add and how much of dividend should I take. Only my share. Only share in associate or only percentage. Somewhere in different color pen, join 3 and 4, and somewhere you put a box and please highlight in your notebook. My screen looks shabby. It's always like that, guys. I don't care. You write it somewhere neatly. Point 3 and 4, total it and take only my share. Very important. Are you following, guys? Common mistake. Don't repeat that mistake, or don't even do that mistake. Why repeat? Done. Now, I am going to ask a question. I am reducing what, guys? Dividend. Imagines the associate did not pay dividend. They only declared a dividend. Can you see difference, guys? Dividend declared as per section 123 of Companies Act should be paid within 30 days. So, dividend is declared, or in other words, let's say proposed dividend. They didn't even declare. Proposed dividend. Will I reduce? No. Only when I have the right to receive, when it's actually declared, resolution passed or received, only I will reduce. Proposed dividend will not be reduced. So, below this dabba, write one note. Below this format, whatever you write a note. If associate declares proposed dividend, or associate notifies, but I can't use the word declares and propose together, it doesn't make sense. If notifies proposed dividend, do not reduce. Are you following, guys? Easier? Understanding, Pavitra? Logic, are you understanding, guys? Bank is saying next month I will give you interest, you can withdraw. I can't reduce until I receive it, correct? That's it. Are you following, guys? So the crux of equity method is, hey, I invested X. What is the value now? Y. Find the value. That's it. Restate the value in consolidation. Shareholders will be happy, because investing in bank FD also you do the same thing. Investing in bank FD, I can't control what the bank can do, even though it's my money. Investing in associate, I can't control what the associate does. I only have an influence. Are you following, guys? For you to easily understand, parents control kids. You do what your parents tell you. You can't go against them. Sir, I will go against them, sir. Okay, exception, leave it. But generally, when you are a kid, let's say you're in 5th standard, 6th standard, you do what parents tell. All the big decisions. Do you do what your siblings tell you? Control is parent-son-daughter relationship. Influence is siblings. Siblings will influence me, but I don't have to do that. Are you following, guys? Hey, don't write all this in exam, guys. Please. Exam, I gave you the terms, not only. That's it. With this, we have successfully completed AS 23 theory. Nothing is left except one concept. What is that concept? I won't say unfortunately because it's easy. What if middle of the year I got 17%, then again middle of the year after a few months I got another 5%. Now it became 23%. Then again I got 2%, it became 25%. This is called step acquisition. In consolidation of subsidiary, we don't have this. We have it, but not in syllabus, correct? But here we have it in syllabus, meaning, sir, what if I have different date of acquisitions? Then you have to compute goodwill or capital reserve 3 times in this case. That is the only concept pending, but I will do that last. Let's go to our straight away illustrations, guys. Take your material. Go to illustrations. We are going to finish this standard in the next 45 minutes to 1 hour. That's it. I told you consolidation means consolidation of subsidiary, guys. Associate, joint venture and all is simply it's that for scoring areas for us. Even if you are studying first time, nothing to panic. Steps I told you, gave you structure. That's it. Illustration 1, guys. I will do illustration 1. You will do illustration 2. Okay. Or we will do together. Look at this. A Limited acquired 45% shares on 1st April 2021 and the price paid was 15 lakhs. 45% means associate or holding of? Associate. The same sum method will change if it becomes 55%. Consolidation of subsidiary AS 21. So associate. What is my cost of investment? 15 lakhs. Super. Following is the extract of balance sheet of B Limited associate on the date of 1st April, on the date of acquisition. Here also important, date of acquisition. Why? Why is my date of acquisition important? To find goodwill or capital reserve. On the date, look at the shareholders funds, guys. Net assets is 10 plus 1 plus 5. How much? 16 lakhs. Super. Okay. B Limited reported net profits of 3 lakhs and paid dividend of 1 lakh for the year ended 31st March. If I put a timeline, look at this. 1st April 21, I purchased the 45% share at 15 lakhs when the value of the company was 16 lakhs is net assets, correct? During the year, they earned a profit of 3 lakhs and declared a dividend of 1 lakh. Paid dividends. Dividend paid is 1 lakh. They are asking you to calculate the amount at which investments in B Limited should be shown in the consolidated balance sheet of A Limited. I am assuming here consolidation is happening along with other subsidiaries. Let's go step by step with what we learnt. What is the first step? Cost of investment. So, I am sure by now some of you would have even started solving the sum and finished it in your mind at least. Cost of investment, how much, guys? 15 lakhs. Super. Second, I have to compute what? Goodwill or capital reserve. You tell me, guys. What is the goodwill? Something worth 16 lakhs. I paid 15 lakhs. So capital reserve is 1 lakh. Correct or wrong? Wrong. Common mistake. Can I compare 16 lakhs and 15 lakhs? No. 15 lakhs is 45%. This also I should take at 45%. How many of you missed that? How many of you missed that? Understood? Common mistake. So my goodwill will be 15 lakhs minus 45% of 16 lakhs. Correct? What I paid versus what I got. Please don't write that in exam, guys. If you lose marks, don't ask me. I am not responsible if you write what I paid, what I got. I am not responsible for what marks you got then. Okay. Fine. So what is the goodwill? What is 45% of 16 lakhs? 7 lakh? 20,000. So 15 lakhs minus 7 lakh 20 is how much? 7 lakh 80,000. That means I am just going to make a statement. Net assets of 7 lakh 20 was paid premium of 7 lakh 80. So totally I paid 15 lakhs. So now you have to split and show. Even though it's cost of investment 15 lakhs, I need to split and show how much is the value of net assets, how much is the value of goodwill. So come down, I will basically 15 lakhs only. I will write investments, which is 15 lakhs only, but I will show breakup 7 lakh 20 plus 7 lakh 80. You can show a separate line item also. Net assets is 7 lakh 20, goodwill is 7 lakh 80,000. Are you guys following? Understanding? You can show separately. After this, add what? My share post acquisition profits. How much, guys? 3 lakhs, 3 lakhs into 45%. 3 lakhs into 45%. How much? 1 lakh? 1 lakh 35,000 less. What do I less, guys? Hello? Less. Sorry, not post dividend, less dividend paid. That's it. Less dividend paid and received, or dividend received by my entity A Limited. How much is that, guys? 1 lakh into 45. The common mistake most students do is they forget this 45% somewhere. It's natural, it happens, but we will avoid that. Minus 45,000. That's it. What is the value of investment, guys? 15 lakh 90,000 is the value of investment. Let me go check the answer. Carrying amount of investment is 15 lakh 90,000. We are done with the sum. Look at the heading, guys. Calculation of carrying amount of investment for the year. Are you following, guys? What is important is, look at this. Cost of investment is 15 lakhs, but you need to show the breakup of how much is net assets, how much is goodwill. Why should I show that disclosure? The shareholder should know I paid 15 lakhs to buy the company, but the asset I got is only 7 lakh 20, remaining is goodwill. Such a disclosure is mandatory as per AS 23. Sir, what if it's capital reserve? Reduce. No, in balance sheet, I'll tell you. In balance sheet, schedule 3, investment in associate will be reflected at 15 lakh 90. In the notes, this table will be there. Notes will have this table. That's it. So the user will be like, okay, investment in associate is worth 15 lakh 90. What is the breakup of this? Go to the notes, look at this table. Are you following? Are you understanding why I am adding profit and reducing dividend? Logic are you getting? Bank FD. That's it. Honestly, AS 23 is over. Now all we have to do is practice more sums. 3 more sums they gave in same template. Little bit, what will come? Pre-acquisition dividend will tell, hey, you forgot me, include me in an adjustment. Like that they will ask. One sum, this sum you computed only for 1 year. In one sum they are giving you profit for next 3 years. You have to find this for next 3 years. Same thing will repeat. 15 lakh 90 is the opening balance of next year. Again add profits of next year, less dividend, new value. Again add profit, less dividend, repeat the repeat every year. That's it. You will keep doing this every year again and again. Are you following? Yes, Vignesh, doubt? $16 lakhs is the net assets, but my value is 45% of this, so 7 lakh 20. Yes. Net asset, see, net asset is 16 lakhs, but what belongs to me is my share 45%, so we have to take 45%. Yes. Okay. Fine. Illustration 2. Now I want you to participate and solve this sum. Gain the confidence in this sum itself, guys. A Limited acquired. Guys, follow, guys. Guys, easy, guys. Hello. New addition, new syllabus. Are you happy? Okay, fine. A Limited acquired 40% share in B Limited. What is the percentage? 40. On 1st April for 10 lakhs. Date of acquisition. On that date, B Limited had 1 lakh equity shares of 10 each and accumulated profits of 2 lakhs. This is pre-acquisition. What is the net assets on date of acquisition? How much, guys? 12 lakhs. 10 plus 2. In that, what belongs to me? 40%. How much is that? 4 lakh 80. I bought 4 lakh 80 by paying. Goodwill is 5 lakh 20. Goodwill over. Are you following up? See, this is easy here because we spent so much time in consolidation of subsidiary. Otherwise, you will, what is this? Otherwise, also you can learn, but that conceptual understanding. Next, during the year 21-22, current year profits. What profit? Post acquisition profit. B Limited suffered a loss. Last sum profit, this sum loss of 10 lakhs. Then during the year 22-23, again next year loss of 12 lakh 50, and again next year 23-24 loss of 5 lakhs. You have done an excellent investment. After I have invested 3 years, loss, loss, loss. Show how this will look in the balance sheet. Are you following, guys? So now if I have to prepare the timeline again, I purchased on 1st April 21. How much percentage? 40% at 10 lakhs. That day net asset was 12 lakhs. In that my share is 40%. How much? 4 lakh 80,000. Therefore, we found out goodwill while reading the question itself. 10 lakhs minus 4 lakh 80. Goodwill is 5 lakh 20. What should I do with this? Split my 10 lakhs as 2. 4 lakh 20 net asset, 5 lakh 20 goodwill. Are you following, guys? Then what happened? They gave data of year 1, year 2, year 3. Basically 3 years after investment. which was 21, 22, 22, 23, 23, 24. Am I right? Yes. This company in the 3 years, no dividend. How they'll pay dividend? Loss. 10 lakhs, 12 lakh, 50, 5 lakhs. 10 lakhs loss, 12.5, and then 5 lakhs loss in each of the years. They are asking you to find the value of investment in each year. And can you see these 3 black dots, guys? That is the year end. Are you following? That's it. That means you have to do the steps computation 1, 2, 3 times. Are you following, guys? Understanding? I will do for the first year. Look at this. First year cost of investment is how much? 10 lakhs, but do not show 10 lakhs. Show 4 lakh 80 plus 5 lakh 20. You need to show the breakup, guys. In fact, don't even write 10. You write 4.8 lakhs here, 5.2 over here, and then show total as 10 lakhs. Are you following, guys? Now year 1. Add or lesser? Less. So in the format, simply don't write add. Add means profit. Less means loss. Don't mug up, guys. I'm sure you know all this basic logic. So add or minus. First year is how much, guys? 10 lakhs loss. Correct? 10 lakhs. But what is my share? My share is 40% into 40%. My investment value has declined by 4 lakhs. So year 1 end, 21, 22 end, it becomes 6 lakhs. Are you guys following? The loss will of course first adjust with what? Goodwill or net assets? Goodwill. That's always default, guys. Adjust the loss with goodwill, then only you will go to balance. This is year 2 value. Year 1. Now year 2, 22, 23. How much loss? So again this year 12 lakh 50 into 40%. How much, guys? 5 lakhs. Again I will reduce 5 lakhs. Year 2 end, 22, 23 end. My value of investments in consolidation balance sheet will be 1 lakh. Are you understanding, guys? Hello, I will show you the format, but are you getting it? So you do 3 tables. I am showing you quick answer. You will do for year 1 separate table, closing balance. Again year 2 separate table. Again year 3 separate table. Little bit detailed in terms of presentation. Year 3 what happens? 23, 24. What's my loss? 5 lakhs into 40%. How much? 2 lakhs loss. So what will be value of investment? Negative. You are getting negative 1 lakh. Can I show on the asset side investment negative 1 lakh? Can I show, guys? The standard says you have done such a good investment where the value is negative. But look at the logic. Look at the logic. Even though it is loss, should I bear this loss? Follow carefully. Even though it's a loss of negative 1 lakh, Adidas invested in Reebok. Reebok company became a loss of 1 lakh, my share. Should I bear the loss? Hello? Separate legal entity. That company's loss is that company's loss. I don't have to pay the liabilities. Correct? Do you remember this, guys? So I don't have to bear that loss. So standard says don't show negative 1 lakh, show 0. This is the next learning. So go back to your template steps. Go back to your template where you wrote, where the carrying value of investment becomes negative, you will disclose as 0. That is the learning in this sum, and that is the only reason we have this sum. Are you following, guys? Anjana, getting it? I hope online everybody is following. Online, are you guys following? Drop a thumbs up if you understood, guys. Only Netra understood, Aishwarya understood. Good. Are you following, guys? So somewhere in your notes where you wrote the template, you wrote note 1, proposed dividend, don't reduce. There you write down, if the above value becomes negative, disclose as 0. If the above value becomes negative, disclose as 0. Following, guys. So come here, look at this. First year we got 6 lakhs. That breakup, can you see here, guys? 6 lakhs we are showing as breakup 4 lakh 20, 10 lakhs was it? 10 lakhs breakup is 4 lakh 80 and 5 lakh 20. First year ending it becomes 6 lakh. Second year ending it becomes 1 lakh, and third year it becomes 0 because it's a negative 1 lakh. For that you have to give a note. They have not given here, but there will be a note. You have to give a note. Negative will not be taken. Look at the presentation, guys. I did one table for the entire thing to teach you how to do it. But exam, please don't do it like that. For each year, you do it separately. Look at this. First I did for 31st March 2022 and found 6 lakhs. Then for next year, investment and associate come down, I found 1 lakh, and again next year it becomes negative. So go through that. Presentation should be like how it is over here. Are you following, guys? Okay. How that 1 lakh came? That 6 lakhs minus 5 lakhs, it becomes 1 lakh. So my loss is 5 lakhs. Share of net assets, because first the loss adjusted with goodwill, and then I am showing net assets less above loss. I am reducing it over here and then add goodwill. So this is just presentation, guys. I am showing the balance value. Reduction in value is reduced over there. Able to follow, guys? Understanding? Hello? Yes. Face okay. Fine. Now we will go to MCQ in the last, guys. Let's go and do. Yes. Which one? See, here what they are doing, I'll explain. Let me come from first itself. I'll come from first, run through the solution for everybody's benefit, because you will do that. Did you understand how 5 lakh 20 goodwill came? Then I will come here. Investment is breakup of 10 lakhs. 10 lakhs show separate breakup. 4 lakh 80 is net asset. Goodwill is 5 lakh 20. Then come to year 1. 10 lakhs less loss 4 lakhs, investment 6 lakhs. Are you following that, guys? Now this 6 lakhs, what he is doing, he is showing breakup of 6 lakhs. We had this 10 lakhs had a breakup of what? 4 lakh 80 and 5 lakh 20. My loss is 4 lakhs. What he is saying, if you look at the balance sheet of associate net assets is now a loss of 4 lakhs. Correct? Associate net assets a loss of 4 lakhs. That means he is saying for presentation, see, in reality goodwill will reduce, but he is saying for presentation purpose, which reduced? Net assets. Net assets, see, associates net asset only became negative 4 lakhs. So from this he is reducing 4 lakhs and saying, today if I sell the assets, I will get only 80,000, but I can get a goodwill of 5 lakh 20 if company has a brand value 80 plus 5 lakh 20, 6 lakhs. Are you following? See, you might be thinking, sir, you told adjust with goodwill first. Logically, yes, but today if I sell my investment, I will get only 80,000. That's my net asset. Goodwill depends if the value is still there. Understood this? Now come to next year. Opening value is 6. Then this 6, what was the breakup that we had? 80,000 and 5 lakh 20. So here if you see, next year losses 5 lakhs. In that 5 lakhs, what he is doing? Share of net assets 4 lakh 80 was there. Already we wrote off 4 lakhs. So remaining 80,000 will reduce. Now it will become 20,000, and the other 20 will be reduced from goodwill 80 plus 20, we have 1 lakh. Are you following, guys? Okay. See here what they are doing. They have done a cumulative reduction, but logically if you speak, this 1 lakh has double component. Net asset value became 0. Goodwill is remaining at 1 lakh. Are you following, guys? Not only they're trying to show here, goodwill is 1 lakh. Balance 1 lakh last year gets fully wiped off. Got it, Dhyaneshwar? Understood? That's it. So presentation, show it like this. Just run through the presentation, it's important. Are you guys genuinely understanding this? Hello? Anjana, sure, clear? This is the key, guys, that 10 lakhs. See, in simple words, adjust the loss first with net assets. Then you adjust balance with goodwill. That's it. For exam, what remember, sir? Adjust the loss with net assets. Then you do it with goodwill. That's it. We'll come to MCQ later. Let's go to additional questions. Kalyan, following? Doubt? Sure. Please feel free to ask doubts. Remember, the doubts you are asking could be doubts for recording students. So there are 100 plus students who are watching recording. They will be benefited if you have doubt. So feel free to ask. Okay. Vignesh, any doubt? Okay, fine. Yes. Question number 1. Additional question 1. For you, it's question number 3. ICA question number 9. All numbers. ICA question practical 9. For our book, question 3. 8. ICA 8. Those who are watching recording, I'll give you Radharam's number. You call Radharam. Okay. Fine. Done, guys. Everybody with me? Pavitra, understanding of? Sure. Fine. Both these questions you can easily do, guys. Bright Limited acquired 30% in East India. For Bright Limited, associate is East India. Shares for 2 lakhs on 1st June. This is an interesting sum where the dates play a part. So date of acquisition is 1st June. You need to find goodwill or capital reserve on 1st June. By such acquisition, Bright can exercise significant influence over East India during the financial year. Okay, they're saying it's associate. They're establishing associate. Full stop. During the financial year ending 31st March 2021. So let me draw the timeline. Acquisition is happening on 1st June 21 is my date of acquisition. I'm acquiring it how much, guys? 30% by paying 2 lakhs. Always if you draw the timeline, at least mentally, you will be sorted with the facts. Then during the financial year under 31st March 2021, this year ending 31st March 21, they earned a profits of 80,000 and declared dividend of 50. So profits this year is 80 minus dividend is 50,000. Declared is different. Declared means I will receive it. Proposed only we will not take it. Yes, Rahul. Correct. You are right. So this will come here. Correct. 31st March 2021. You are absolutely right. 31st March 2021. Add profits how much, guys? 80,000. Dividend is 50. That means what profit is this? Pre-acquisition. What dividend is this? Pre-acquisition. So from this cost of investment, I have to reduce pre-acquisition dividend. Reduce how much? Radharam says 50,000. It's 50,000 into 30%. Are you following, guys? First he told 50, guys. Then he changed. Continuing. Okay. Joking, guys. Now come back. Declared a dividend on 12th August. So look at this. Profit is earned. Let me clarify again. Profit is earned on 31st March. Dividend is declared on 12th August 21. So dividend will come somewhere here. 12th August 21. How much, guys? 50,000. But this dividend is from pre-acquisition profits. That's why they gave a sentence like that. Are you following, guys? See, only dates are confusing because I confused you. It's not confusing. Acquisition is on 1st April. 1st June, sorry. Restart. Acquisition is on 1st June. 31st March 21, previous year ending profit is 80,000. This year 12th August dividend is paid from previous year profit, so it's a pre-acquisition dividend. Look at this, earned profits of 80 and declared dividend of 50 for that year. East India reported earnings of 3 lakh for the financial year ending 31st March 2022. So 31st March 22, they earned a profit of 3 lakh, which is for the entire year. Now this has pre and post. Are you following, guys? So what? We have done so much in consolidation, this is nothing. So how many months are pre? 2 months. How many months are post? 10 months. Like this, if we can draw a timeline, nothing can come close to confusing us. Assume profits to accrue evenly. That means he's saying, please split using the ratio 2:10. And declared dividend of 60,000 on 12th June 22. Next year, 12th June 22, they declared dividend of 60,000. This is what dividend? Post acquisition. I am presuming it to be post because after acquisition I am getting it. Why this 50 is pre? It is paid from pre-acquisition. Are you following, guys? Go through the question one more time. Everybody recording can pause, go through, and then I will go to the summary table, see if you understand the same thing. Yes, Vignesh. Here dividend is paid from the profits, even though dividend is paid after acquisition, very important, even though dividend is paid after acquisition, it is paid from profits which is pre, so it becomes pre-acquisition dividend. Got it? General meaning of pre-acquisition dividend is not paid before acquisition. Dividend paid from profits earned before acquisition is called pre-acquisition dividend. Let me repeat. Dividend paid from profits earned before acquisition. Are you following, guys? Now, is this clear for everybody? Kalyan, yes. What is the requirement? Calculate carrying amount of investment in separate financial statement. That means without consolidation. Basically, you will consider at cost price. How much you paid? Cost price less dividend if any. What is the value for consolidation on 31st March? What will be carrying amount on 30th June 2022? 2 times you have to compute. First, what is the carrying amount of investments in separate financial statements? That means before consolidation. Before consolidation, nothing great. Before consolidation, my investments will be at what price, guys? Whatever you paid, how much? 2 lakhs. But 2 lakhs minus pre-acquisition. Correct? See, cost of investment means cost of investment minus pre-acquisition. See, if you remember these steps which I gave in the starting in equity method, this part is the cost of investment which is there in the balance sheet. After this only, this goodwill, post dividend only are adjustments for the purpose of consolidation. So here in this sum, investment is 2 lakhs. How much is dividend, guys? Rather I am told as how much? 50,000 into 30%. So less 50,000 into 30% minus 15,000, you get 1,85,000. Same answer with or without calculator also you will get the same answer, 50,000 into 30%. So that is the first answer, guys. Look at this. Can you see here, guys? Presentation carrying amount of in separate financial statement without consolidation is 1,85,000. Are you following, guys? This value is the value of investment, not as per AS 23. This as per AS 13. Consolidation adjustment is going to come only now. Those who know AS 13 and those who are going to learn, in AS 13 also you will learn investment less pre-acquisition interest, pre-acquisition dividend we will do. Sir, we have in syllabus, yes. In old syllabus, I'll tell you, small detour, follow guys. In old syllabus group 1 accounts, we had 2 chapters, AS 13 investments plus one more separate chapter called investment accounts. In new syllabus, they removed investment accounts and they have only AS 13, but this also is there in AS 13. They removed a separate chapter and added into AS 13. So anybody old syllabus students, don't think investment is removed. It's there as per AS 13. Lakshita, clear? Okay. For a second, students will get happy, investment I striked off, but it's added in AS 13. So this is that adjustment. In AS 13 you will get clarity. Following guys, now follow consolidated financial statements of Bright Limited on 31st March 22. Go to my diagram guys, my diagram. Which day you want to find? This day. That means for this day, I have to take cost of investment plus, minus pre-acquisition dividend of course, and plus post-acquisition profits. Here goodwill, net assets cannot be found. Even if you don't find, 2 lakhs is inclusive of goodwill. Correct? Are you following guys? So let's do it. Can I find goodwill? Is there details in question? They have not given net assets. We can't find. So you will just take the same value. So I am trying to find this day guys, 31st March. Let me do it here itself. 1. Cost of investment. How much guys? 1,85,000 already reduced. Correct? In above step I already reduced. Correct? Add post acquisition profits. Important to add post acquisition. How much? Current year profit is 3 lakhs. So how much guys? 3 lakh into 30%. How much guys? How much? 90,000. How many of you added like this? 3 lakh into 30%? Yes. Daneshwar? No. Now, I told you while reading the question itself, 3 lakhs is for the whole year, but post is only 10 months. So I will do it like this. 3 lakhs into 10 by 12 into 30%. Are you following guys? How much? 75,000 I will add. So what is the value of investment guys? 2,60,000. Will I reduce dividend? Should I reduce dividend? Now, I am finding on which day? 31st March. So as of this day, so far only one dividend of 50 was declared, which is already reduced in my cost of investment. Sir, what about this 60 dividend on 12th June? Yet to declare. In the future only it will come. Are you following guys? So now value is 2,60,000. Let me show you exam presentation. Look at this. Start off with 1,85,000. Add 75. Answer is 2,60,000. Common mistake here. Everybody will do 3 lakh into 30%. You will forget this 10 by 12. Are you following guys? Now what is the value of, now next question, third question. They are asking you value of investment on 12th June 2022. That means, look at this. Already on 31st March 22, just now we found the value as 2,60,000. Now we have to find on 12/6. I have to find for 12/6/22. So from this day, what is the movement guys? Add profit less dividend. But to add profit, data is not there. But dividend is given. So I will reduce dividend. Correct? Hello? How much is the dividend? Dividend is 60,000. My share is 60,000 into 30%, 18,000. This is post acquisition dividend. So straight away reduce. 2,60,000 minus 18. How much? 2,42,000 is my answer. Are you following, guys? Let me show you the presentation over here. Look at this. 2,60,000 is what I computed above, correct? With that less dividend 18, carrying amount is 2,42,000. Are you following, guys? Easy or difficult? Hello? Understanding really, guys? That's it. This is the answer. Clear? Yes, Vignesh. Make a note. Subdivision 2 and 3, if somebody wants to copy, here is the neat answer. Please copy it. Yes, Vignesh. Which one? Very simple. I hope you guys have noted. Pre-acquisition, post-acquisition is nothing. I acquired the company on 1st June. So from 1st June, before 1st June, 2 months from beginning of the year is pre, after 1st June is post. Okay. Fine. Done, guys. Last question with this chapter is over. MCQ we will do. In that I should teach a new concept. Now, one second. After this sum you asked out. Question number 2, which is question number 4 for you guys. ICA question 9. Here in this book question 2. Depending on which source you are using. Reference. Now this question, previous 3 questions who solved, guys? I solved, you observed and copied. This question, nothing new. You are going to solve and get confidence. Last sum, I will just brief the question and drop hints here and there. Easy question. If you have to mark something as important, previous question you can mark as important. Each question has a learning, correct? That first question was basic. Second was loss, means what to do. Third question, pre-acquisition and post. This question is nothing. It's just a practice question. A acquired 25% shares in B on 31st March for 3 lakhs. Date of acquisition is there. Amount of investment is there. On the same day, they gave the balance sheet below. With this, you can find what, guys? Net assets. So you can find goodwill. You do it. I am not going to do that. Come down. 3 requirements. Look at this. During the year 31st March 2022, following additional information is given. A Limited received dividend from B Limited for the year ended 31st March 2021 at 40% from reserves. B Limited made a profit after tax of 7 lakhs for the year ended 31st March 2022. I am not giving any hint, guys, just reading. Then B Limited again declared dividend of 50% for next year. So 2 dividends. That means one could be pre, one could be post. You need to identify. This only is an assumption which is default in all sums. A Limited is preparing consolidation financial statements in accordance with AS 21 for its various subsidiaries. That means they are doing consolidation. Calculate 3 things. First, they are asking to calculate goodwill or capital reserve. Second, how A Limited will reflect the value of investment in consolidated financial statements. How dividend will be shown in the consolidated financial statements. In simple, you calculate value of investments on 2 dates, 31st March 21, 31st March 22. Some will get over. That's it. Are you following, guys? Can you try doing it? 3 steps. Goodwill, value of investment beginning of the year, value of investment end of the year. Do it, guys, everybody. Let's spend 5 minutes. It's okay. Recording, everybody try it out. This is the question. If you have understood, please draw the timeline. If I draw the timeline, sum is over. You should put that effort. Nothing new in this question. Promise nothing new. Same as what we learned. It's just application of knowledge. Let's do it in the class. Let's revise and practice in the class, guys. Recording students, don't look at my face. Online answer, they're saying goodwill capital reserve is nil is one answer. 0, 0 you are all getting. Very simple. Look at this. Net assets is 10 lakhs. In that my share is 25%, which is 2 lakh 50. I invested how much? 3 lakh. Then goodwill should come 50,000 rupees. No. Correct. How many have you got goodwill as 50,000 rupees? 50k. Good. Now, from investment, what we should reduce? Pre-acquisition dividend. Look at this. First point. A Limited received dividend from B Limited for the year ended 31st March 21. That means previous year, the year of acquisition. 40% from the reserves. So 40% of 5 lakhs is how much, guys? 2 lakhs is the dividend paid, but my share is only 25%. So my share is 50,000, which is pre-acquisition dividend. I have to reduce this. So 2 lakh 50 compared with 2 lakh 50. Look at the workings here, guys. I paid 3 lakhs less pre-acquisition dividend 2 lakh 50 compared with 2 lakh 50. Goodwill is nil. How many of you got nil? Good job. How many of you got 50,000 rupees? Come on, guys. Pre-acquisition dividend. I've told many times you cannot panic and stress. I asked you to solve because I know half of you will write goodwill as 50. You didn't read the question. Very important, guys. Chapter is easy, but you need to stick to the template. Look at the values. Good, those who got it. Others, have you understood why it's nil? Daneshwar, everybody. Rahul, sure. Do now. Value of investment. I want value of investment on 31st March 21, 31st March 22. Date of acquisition, value of investment after 1 year. Answer I'm getting online. Vignesh says 4 lakh 25,000. Others do it, guys. In about a minute or two, I'll discuss the answer. Radhanam also gets 4 lakh 25. Investment value. Nothing new, guys. Same previous sums application. That's it. Practice, guys. In the same video, same class, we are going to finish one full standard AS 23. Follow, guys. Look at this. Your cost of investment was 2 lakh 50. In that, profit is how much, guys? 7 lakhs. In that 7 lakhs, how much is mine? In that 7 lakhs, what's mine? 25%. How much is that? 1 lakh 75,000. So I will add that. I will find 4 lakh 25,000. Are you following, guys? That's it. Later, next year, I will reduce dividend because I don't have to reduce dividend. Why? Look at this. It's declared on which day? 4th, 30th April. 30th April. I am finding value on which day? 31/3. So you will not reduce dividend. When I will reduce dividend? If you are finding value on 30th April. Are you following it? How many of you reduced dividend? 1, 2, 3. How many of you didn't reduce? Are you following, guys? You will reduce, you are correct. If you are going to find the value on 30th April, then you will reduce dividend whatever is the share. That is not required in this question. That's why here they are saying below notes how to present pre-acquisition dividend of 50 lakhs, 50,000 is reduced from cost of investment, and then they are saying dividend declared on 30th April will not be recognized in the consolidated financial statements on this day. Only next year I will consider the dividend. Are you following, guys? Kalyan getting it? Everybody, Lakshita getting it? Easy? Vishnu? So if I have to draw a timeline for this sum, acquisition took place on which day? 31st March 21. Then year ending is 31st March 22. Dividend declared is 30th April 22. On this day, there was a pre-acquisition dividend. On this day, we found value of investments by just adding profits. No reduction of dividend because it's happening later. The reason I asked you to solve is mistakes you have done. When you are solving only, you make mistakes. One mistake was some of you forgot to reduce pre-acquisition, which we know you have to do it. Some of you reduced the dividend blindly going by the format, not looking at the date difference. So put that timeline in the answer sheet, it's okay, or put it at least in your mind. Will I get extra marks for drawing this timeline? Not even half mark, but helps you get clarity. If you want to save time, you have control, timeline will be in my mind. That's it. Are you following, guys? With this, we are done with the 4 illustrations of consolidation of associate. Yes, Vignesh. Goodwill in this sum, huh? Very simple. Where is it? Yeah. See, goodwill computation is basically what you paid versus what you got. What I paid is 3 lakhs. Here what I got is net asset of the company is 10 lakhs. In that my share is 25%. So 2 lakh 50. But from what I paid, I am reducing pre-acquisition dividend. So what I paid also becomes 2 lakh 50 minus 2 lakh 50. Goodwill is 0. Got it? Huh? Just one last small theory. Yeah, this point somewhere add in your notes, guys. This we finished. Treatment of proposed dividend. What do? You will not take into consideration. Now, last key theory point which I want you to focus is in AS 20. Do you remember potential equity shares? So let's say I invested in associate for 25%. I also invested in debentures of associate, which is going to become equity shares. Now should I take 25% or 25% plus potential equity shares? Are you following, guys? See, today I have 25%, but next year this 25 is going to become 30. The standard says you compute for this year. Next year we will see in next year. So the potential equity shares of investee held by the investor should not be taken into account while determining the voting power. It's a theory point. They have not tested so far. So far means what? New syllabus first time. Now only I will know if they are going to test or not. So it can be MCQ, can be anywhere. So ensure that you just write this note somewhere. Last theory which I want to teach in the ending. Potential equity shares of investee. Who is investee? The company in which I invested became my associate. Okay. Potential equity shares like convertible debentures if I invested, potential rights issue if anything is going to come next year, all those things I will not consider, ESOP, etc. That's it. Sums and all, it's not there. Theory point. Clear, guys? Then only one last concept in sums. Step acquisition we will do with MCQ. Can we go to MCQs, guys? Hello, Rajaram. Yes, can we go? Done. Please make a note of that highlighted part in yellow. Let me just run through the whole theory in the book. Yeah, actually we're done with everything, guys. Come down to MCQs. See, for standards like consolidation, AS 21, 23, 27, for amalgamation AS 14, I am not giving you AS notes. AS notes is coming only for exclusive AS standards. That's why for this I am giving you notes in the class itself. Are you following, guys? Okay. Come down to MCQ. Fine. Notes whoever doesn't have, just reach out. I have a drive link. I'll just give it off to you guys. Next. Identify which of the statements are correct. An enterprise can influence significant economic decision making by many ways, like representation on the board of directors of governing body of investee, participation in policy decision making, interchange of management personnel, provision of essential technical information. Answer: A or B or C or D or significant influence. Which one? So standard says significant influence means participating in operations and finances. So everything is included. Answer is C. All are correct. Are you following, guys? Economic decisions, representing board, policy making, interchange of managerial personnel, and provision of essential technical information. All are participation in company. Next. This only I will come back to it. This is the one I am yet to teach you. Step acquisition. Let's do other sums. 3. Can you quickly compute and find the answer, guys? They have given details. You have to find goodwill. No, sorry, you can't do it. Sorry, step acquisition, leave it. 2 also is, 2 we can do, sorry, 2 only is not step acquisition, sorry, 2 we can do it. A Limited is holding 90% in B and B Limited has 10% in C and B Limited is holding, A is holding 10% in C, B is having 11% in C. This is the diagram. A in B 90, B in C 11, A in C 10. Identify which of the statements are incorrect. In this case, A is parent of B. Correct? Yes. Holding is, you call it as parent. As far as the relationship between A and C is concerned, we are talking about A and C is concerned. A has a total direct and indirect control of 10 plus 90 plus 11, 19.9% in C, something they have written wrong. Okay, then C Limited is an associate of A Limited. Is C associate of A? No, associate you want how much? 20%. I think this number, is it correct for you guys printing? 19.9 is given, no? Okay, fine. Next. Look at the options. Statement 2 is incorrect. They are saying 2 is incorrect. Statement 3 is incorrect. Statement 2 and 3 both are incorrect. All statements are incorrect. Answer C, because A is correct. A is the parent of B. That is correct. But C is definitely incorrect. Correct? Because A and C are not associate, because you need how much? 20%. Here is it 19.9? No, I have more than 90%. So it's incorrect. A has in B. So you are computing like this, 11 into 90%. In that, A as a relationship is concerned, A has a total control of direct and indirect holding of, no, you cannot add like that. How will you add like that? What is the answer given for this? Which one? Question 2. Statement 2 is incorrect. Statement 2. So here let me just redraw the diagram. A has in B 90%. A has in C 10%. B has in C 11%. So I control 90% of 11%, which comes to how much? 9.9% in C plus 10, you get 19. That is what I want to communicate. See, mathematically you are saying 19.9, but if A wants, A can control the full 11% because A controls B as a holding. So whatever A tells only B will do. So indirectly B controls 11%. Correct? So technically I cannot do this 19.9%. It doesn't make sense. Technically I am saying, see, mathematically you are right, I control 90% of 11, but I am saying substance over form. Let's read this. As far as the relationship between A and C is concerned, A limited has a total direct and indirect control of 19.9%. Okay, what is the answer they gave for this? So this is wrong, guys. This is definitely wrong. Are you following, guys? You should never do like 19.9%. Do you get the logic, guys? This is not correct. You can't do like this. See why I am saying A controls 90% of B. That means I control totally 21% of C. So now look at this. A has in C how much, guys? 21%. 10 plus 11. Therefore, it becomes an associate. Therefore, what is wrong is 2. Are you following, guys? Understood? Everybody clear? Understanding how MCQs will come? It's not going to be direct answer, guys. You have to apply the concept. Are you following, guys? See, I have the advantage of going down, checking the answer and explaining to you why answer is 2. See, that's how you have to learn. When you don't know the answer, check the answer, figure out why it's, but when you keep doing this again and again, you will know. In that ICA website, that new MCQ, are they giving answers? After evaluations. No, which question, what is the correct answer you are getting? Fine, then that's good. Understood this, guys? Good MCQ. Hello? Okay. Next. 3 later we will do. 4 also later. 5. Identify which of the statements are correct. Read and tell me the answer, guys. In case of associate made a provision for proposed dividend, it should be taken, associate should be considered without taking into consideration. Yes. In case of associate makes a provision for proposed dividend, taking into consideration, no. 2 is wrong. 3. Potential equity shares of investee held by investor should not be taken into consideration. Correct. 1 and 3 are correct. The potential equity shares held by investee should be taken. No. So answer is 1 and 3. Statement A, 1 and 3. 1 and 3. Are you following? This is easy, but this also is easy, guys. Someone confused me here. Sir, 19.9 is correct. You cannot compute percentage. Indirectly you control full thing. It's okay. We have to make mistakes because the mistake we are doing is what you will do. End of the day, you don't do this in exam. Fine. I just need last 5 minutes of your time, guys. Okay. Let's say on this day, I acquired 10% of a company, and this day I acquired, let's say 7% of the company. Okay. Now, I purchased 10% of the company by paying 2 lakhs. I purchased 7% later, let's say after 6 months, by paying 1 lakh 50. This is my cost of investment. See, in all the sums, we had only one date. Here we have 2 dates of acquisition. 10 is one day, 7 is another day. Even if I have 5 dates, same method. Now, when you find goodwill or capital reserve, is it an associate here? Not yet. Not yet associate. I will first take net assets of the company as a whole. Let's say 10 lakhs on this day, guys. And this day, let's say it is 12 lakhs. But how much of the net assets I acquired on this day? Here at 10%, how much? 1 lakh. Here at 7%. So 12 lakhs into 7%, how much? 84,000. Are you following? So, on this day, the first day when I acquired, I have a goodwill of, I paid 2 lakhs for 1 lakh. My goodwill is 1 lakh. Plus, here, for 84,000 you paid 1 lakh 50. So, goodwill is 66,000. So, total goodwill after both acquisitions is 1 lakh 66. That's it. This is only step acquisition. You have to do it multiple times. Are you following, guys? So then when will I add share of profits and reduce dividend? You won't do it now. Am I an associate? No, only 17%. I will not add. The day it becomes 20%, after that day only, post acquisition profits will be added. Are you in equity method? I am talking about equity method, guys. Equity method, the day it becomes associate, after that I will add. Sir, what if instead of 1 lakh 50 here, you paid only 80,000 rupees? You will get capital reserve of. So my net value is, one is capital reserve, one is net is 96,000 goodwill. That's it. So for each acquisition, compute it separately. Are you following, guys? Clear? With this background, let's do MCQ 3. Basically, MCQ 3 is example 2 in the study mat inside. It's an example question. They gave us MCQ. Look at this. A Limited acquired 10% of B on 1st April and further 15% on 1st October after almost 6 months. Information. 10% I paid 1 lakh, 15% I paid 1 lakh 55. Net assets on 1st April is 8 lakh 50. On 1st October, 10 lakhs. What is the amount of goodwill or capital reserve arising out of significant influence? 10 plus 15, 25. Can you find? Do it, guys. Look at this. First I paid 1 lakh and I got 10% of 8 lakh 50, which is 85,000. So in first I got a goodwill of 15,000. Plus in second I paid 1 lakh 55. I got 15% of 10 lakhs. 1 lakh 50. 5,000 goodwill, 15 plus 5. That's it. Following. This is called step acquisition of goodwill. Even if it comes in main sum, when I will add post after 1st October. Are you following, guys? But actually, if you see technically, there is actually, we don't have sums like that, so you don't have to panic. But if it comes 1st April, 1st October, here I have 10%, here I have 15%. This profits I earn here is both pre and post. Are you following, guys? It's both pre and post. Let's say the profit I earn here is 1 lakh. What is my share? 10%. So that 10,000 for me is post from this day. But in this, what is my share I paid? 15. 15,000 is pre. So when you do that investments, you will add 10,000 as post and 15,000 will be pre. Are you following up? Are you getting the logic, guys? Because there is a step acquisition. Consolidation also same thing. When we go to consolidation of subsidiary, multiple acquisitions, same profit will have pre and post. We don't have sums like that. You don't have to panic. But if it comes, just in case, what you will do? From that, for this 10% is post, for this 15% is pre. Can you get the logic, guys? Sir, okay, sir, I got 10, 15, 25,000 I figured out. In this, out of this 1 lakh, 25,000 is mine. In that 10 is pre, 15 is, sorry, 10 is post, 15 is pre. What about the remaining 75,000? Others, not mine. I have only 25%. Others, I don't care about it. I am the minority. Are you following up? Are you getting it, guys? Okay. With the same logic, do MCQ 4, last one. With that, we can close this chapter. You don't need calculator. We can do it in mind itself, guys. 10,000 goodwill. Here, what is happening? In first case, you are getting goodwill of 15. Second case, you are getting a capital reserve of 5,000. So, net of 10. Are you getting it? Kalyan, following up. See here, how capital reserve? I paid 1,45,000. For 15%, it's worth 1,50,000. So, good capital reserve is 5,000. Answer is goodwill 10,000. Sure, 100%. Guys, clear? Face expression changed after I looked at you. Are you following? Really, 100%. Let me check. Only you will answer and recording students will answer. On 1st September, I acquired a company for 7% by paying 70,000 when the net assets of the company was, let's say, 5 lakhs. Again on 15th September, I acquired 20% for 1,50,000 when the net assets of company is 6 lakhs. Tell me goodwill or capital reserve. Others all silent if you do. First row, first girl will tell and recording students will do it. Randomly I gave numbers. I don't know what will come. We will wait until she finishes. Finished. Others finished. Vignesh, answer online. Vignesh, are you there? Hello. Compute fast. Yes, answer. One second, Vignesh. Answer is 65,000 goodwill. Sorry? One answer, 35,000 goodwill. Yes, your answer. Hello. 65,000 goodwill. Goodwill. Others? Radharam. 5,000 goodwill. Yes, I got multiple answers. Makes me happy. Compute, guys. I paid 70,000 for 7% of 5 lakh. What is 7% of 5 lakhs? 35,000. So goodwill is 35. Vignesh did only half sum. No, second. Again 20%. I paid 1,50,000 for 20% of 6 lakhs. 1,20,000. For 1,20,000 I paid 1,50,000. 30,000. So 30 plus 35, 65,000. Good. She has understood. She has proved it. Yes, clap, guys. Fine. Following, guys. Everybody understood. That's it. With this, AS 23 is done. Thank you. Consolidation of associate is done. Any doubts here? Any doubts online? Fine. See you in the next session.